disturb. Oh. Am I live? I have no freaking idea. So far, it doesn't say that I'm live. Let me see your channel. Oh, it says that I'm live now. Now it does. I should wear my glasses when I do crap like this. I gotta check out. We're gonna go over here, hit Active Trader Pro properties, and we're going to go to Active Trader Pro. Bum, 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 bum. I was on FinViz, and we'll go over. Just waiting for folks to join, but I was on FinViz and I was looking. Robert Dugan, I know Robert Dugan, and this is the great thing about FinViz. You click on Robert Dugan, Morning Joe, and Sherry, and those folks who were on, Brandon and everybody. We were looking at insider trading before. Click on Robert Dugan. It just reminded me. He's the dude that spent $400 million on SMMT. And SMMT, that was March 6th. So it was March 8th we noticed it. So let's go to SMMT. And we're going to run this. Let's go to March 8th. That was right when you got this buy for 150. You're at 182. It's going pretty well. Even though you dipped down, you know, this was a nice 8% gain right there. And that's where we initially went over it. You kind of maybe got out with the 8% gain. Maybe you got back in. Got up to 220. But his new purchase is PLSE. It's another biopharma. Pulse Biosciences. And look at that chart. Now, it's a long-term chart. It sucks. There we'll go. Weekly. Yeah, that's the chart you really want to look at. But it's climbing back. It's close to its 200-day at $12. But click on PLSE. They're not making money. They're losing $58 million. It's 189% return this year. Over 1 year, it's 441% gain. There's no coverage, blah, blah, blah. Just got some May 12th, a few days ago, earnings call. But Dugan, who's a director, just bought $65 million worth of shares. So, yeah. Interesting. I love this FinViz. Looking at FinViz and finding the story. It's a good one. Let's do some scans. Let's see. Where's my notes? I'm going to move over here. Going to move this over. I got some stuff to talk about. The scans. Daily scanner. Brokerage holdings. Coke. Oxy. MPLX. MPLX just had their ex-dividend date. Payout date. Here. Their ex-dividend date was back here right after earnings. Great master limited partnership. MPLX here. 9.14% dividend. It is trading at 33. The average target price is 39. It's 4% below its 52-week high. I just hold it. Again, can you argue with the results on this one? It's been pretty good. But MPLX, I like that one. Core investments. Let's look. Qualcomm. Ooh, I forget who asked me about Qualcomm. But Qualcomm's in there at $1.06. Look at that. It's turned the corner. Boom. Right before its ex-dividend date. Core investment, energy names. Ooh. Energy's going to get a boost because they just announced they're going to refill the strategic oil reserves. They're only buying 3 million barrels worth, so it's not the hundreds of millions of barrels worth that they need to buy. But they're buying 3 million barrels. 3 million barrels takes a lot off the world stage to buy. So it's enough to move the needle. But and I think it's just way too early for people to be jumping on, but hopefully everybody has the ooh, I gotta get some water. Waiting for this scan to take place. Senator J.D. Vance coming up. What a douche. FAS. Is that the short? That's the short. Let me see. That's the bull. No, that's the bull. Wow, the financial bull crossed up. Triple levered. Huh. Mid cap crossed up. These two are kind of right in the mix. Wow. Oxy's almost over 60 again. You can still get that one. Roblox at 38. There's not much that's... Oh my God, it's up. Oh my God, it's up. It's not in the core portfolio. Okay, UMDD. There's the levered. Low-cost Vanguard. Let's look at low-cost Vanguard. Ugh, there's a lot. I'll put guard ETFs. VWO, BTV, VYM, RSP. I watched an AI video last night that was awesome. Ooh, and these are great. XLF, XLE I already have. XLI. XLB materials crossed up. Well, it's under the 200-day. Interesting. I'm still hanging on to my small Cleveland Cliffs investment that I'm down like 40% on. Ugh. And yeah, by the way, just in case you missed it, the hair is a different color today. It will be a much different color tomorrow. Okay, those are the spider sectors. Let's look at my not owned list. I haven't added to my not owned list in quite a while. Jumia, Adobe, Match, Starwood, they already had their earnings. Rocket Mortgage had them. Best Buy is coming up. Home Depot, if you can get it in the 2.7 range. It's trading in 280. I think the 2.7 handle is probably good. UPS cross up. That gap might have been filled. Let's see. Shipping has just been a horrible. There was an interesting post in Zip Trader Facebook group last night. Everybody's complaining that Charlie is the new Kathy Woods because he has just missed on every call that he's made. But you know, speaking of shipping, let's look at Zim. It's been a dog, but it's kind of put in this. If that's a shoulder, I don't know. See, I mean, here's the. It IPO'd, right after the pandemic, so you don't know what it was worth. But it IPO'd at 14. You've made a complete roundabout on the weekly. And this was a favorite of a lot of people, retail traders. After the pandemic, let's go to the Dow. Let's look at ARC. By the way, big news. I'm shocked at this, but I have a fireside chat with Kathy Woods. Yeah. Super small. Let's talk about disruptors. I'm going to actually look at that. Let's go to the Facebook group. Because the disruptors list that I posted this. This one's funny if you want to read it. I'll talk about ChatGPT. There's a Twitter account, this one, the ChatGPT Fund, and they've given it $50,000. And they explain their strategy. And here's the scores that ChatGPT found. I find it ironic. Berkshire is number 1. Google is number 2. I don't even know what DVA is. But there's quite a bit in here that I was shocked at. First Solar, which has just had a huge run up. Apple is way down here, but Apple is included, so it's probably a good thing. But yeah, let's look at, this is the one. I think it was Melissa. Yeah, Melissa posted it. Disruptor 50. Follow link. Disruptor list. So here's the disruptor list, disruptor 50. It's an interesting list, and I noticed this because Peloton's on it. I'll talk about that. Let's talk about this disruptor list. CNBC. Top 50. Okay, we'll include that. I like that. I only realize it because Peloton's on this list. It's got to cross up. You know what? We'll put it in there because I have talked about it before. Okay, let's go to the Dow 30. We know what's not going to be on here is Home Depot. Unless they came up before earnings as something positive. And I don't know about you guys, but have you read, just Google Apple virtual reality headset. It's getting some really good press. AXP. Home Depot did cross up. CVX is already on there. Okay. There's the Dow 30. Let's go to the NASDAQ 100. Scan. Let's talk about. That's interesting. Boom, boom, boom. Fang. INTU. Adobe. ADP. Regen. Ross Stores. Came up. Interesting. Let's go to S&P. I'm going to skip the energy sector because I think I've got enough in our energy list. Union Pacific, I don't like that one. It's a utility. I've got everything that I need to in there. Okay. Okay, if you're watching on YouTube, hit that thumbs up button. Make sure you're subscribed. I am on here every day the market is open. I'm just taking my notes and putting them in an order that makes sense. Okay, X. Okay. Boom, 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 boom. Let me look at one that's flying is SE. I think I had this in my notes. No, I don't want DRD. I want SE. This has been flying of late. Their earnings just came out. That's why. I think, did somebody ask me to look at this recently? Sage. Bum, 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 bum. Scrolling down. Friday, Sage. Yeah. We'll just go back to the podcast one. I guess nobody asked me to look at it, but let's see. Joe, you know I love my PXD. I actually should be adding to it too as well. Let's go to strategy tester. It might. Yeah, if you look at that, I'm going to make it bigger. It's very close. I do think with today, I mean, just it's been beaten down and beaten down. Its ex-dividend date is coming up. I can't imagine this doesn't get back to 220 before that ex-dividend date. But honestly, it's below the 200-day with that kind of dividend, with this kind of energy price. Let's see. They are mostly in natural gas. Natural gas has been held down. I think PXD is mostly natural gas. Let me look. Operates independent oil and gas exploration. The company explores for, develops, and produces natural gas liquids and gas. Yeah. So it's mainly natural gas in the Midland Basin in West Texas. You can see in November a couple of small buys at about 247, 250. So I think they're managing to about a $250 target price, but the chart just doesn't look good. But I agree with you, Joe. I mean, I bought at 206. 208 I think is my average price. I like it there. The VIX is at 17. Let's look at you, VIXy. I'm going to bring it up. I won't bring up PXD. God, look at you, VIXy. With the VIX kind of just... SVIXy has just been a monster. And it's because this ETF is broken. And it's ironic. It just got you out. Did it get you out? Let's see. Hold on. It's still running. It's still thinking. Morning, Brian. Yeah. They explore for, I think it's mainly natural gas, though, Christian. According to FinViz, at least, it says explores for, develops, and produces oil, natural gas, liquids, and gas. So maybe it's oil is the number one since it mentions that first. But, I mean, it's just a good mix. You know, look at that. Total revenue, 17 million, 24 million. Trailing 12 months, 22 million. I mean, it's going down. Cost of revenue is going down. Well, it went up a little bit. But at 22 million is going down to 10 million. Gross profits going up. Well, down from last year, but it's just because the price of this stuff has been held down. I think you'll be at, my guess is you'll trade between 200 and 250 this year. I just like holding it. Again, if you trade between 200 and 250 and you get it closer to 200, you know what? You're getting 11% dividend. So as long as you dollar cost average towards 200, I think you're okay. COF. Capital One Finance is the big one. Yeah. That's where you saw the pop in PXD. And talks are supposedly still going on. So, you know, listen, I'm not in the room. I have no friends that work for Exxon, but that company has a ton of cash. I hold Exxon stock. And, you know, what's going to happen is when PXD is bought, Exxon will go down, PXD will go up. It's just the way mergers and acquisitions happen. Because they'll overpay for it. Okay. Berkshire. With debt ceiling getting ready. ChatGPT, Microsoft, ATVI. SC has been flying into earnings. Beaten down. Scans. There we go. Okay. Joe, I think it's a good bet. It's my take on it. I mean, I don't know your particular age, but I am 52. You know, Brian, ironic you mentioned that. So go and follow ChatGPT Fund on Twitter. ChatGPT Trader is the actual thing. Let's see. I have to reload this because it didn't load this picture. There we go. It goes over, this thread actually goes over their, Joe, you're about my age. You could probably, you're 10 years young. Well, I shouldn't say about. You're 10 years younger than I am. You can take a little bit more risk than I do. At 52, you kind of get into, if 2% to 3% of your portfolio, of your overall portfolio, is super, super risky, you get kind of nervous. Like could go to zero. We're talking could go to zero. PXD is not going to zero. But if PXD goes down to 150, you don't want 10% of your portfolio in something that's going to lose that much. But Brian, follow this one, and I'll kind of talk about it. I think ChatGPT is behind the curve. And what I mean by that is Bard looks at today's internet. The way ChatGPT is set up, it's trained on historics of the internet. So even ChatGPT-4, which was updated to, I think, 2022 or 2023, isn't up to date to today. Bard, on the other hand, is trained to today. So let's see. Together a stock portfolio. Outperform the S&P. Let's see. I don't think it's going to help me with that direct of a question. Here are a few stocks that may want to consider for your portfolio. Apple, Amazon, Microsoft, Tesla, Visa. I mean, you could ask this stuff. I like the way this particular fund did it. ChatGPT 3.5 analyzed recent stock news articles and gave us individual stocks a sentiment score. This resulted in a grade. When you took the top 100, here's what we come up with. Forget all previous instructions. Pretend you are a financial expert with a company, blah, blah, blah. This is the list that it came up with. Here, I'll post this. No, I need to. I'll post this in the chat. So Bard, listen, I'm no AI expert, but Bard, it's more responsive than ChatGPT. B, it's more up to date. It does have some hiccups in some stuff that I've tried, but I like it better. I really like it better. But this one, it's an interesting one. If you're interested in that stuff, this is what to follow. I mean, this is 100% what to follow. These guys, I think they're doing it right. I put it that way. They were up 0.7% yesterday, which is it is ironic too. Look at what they're using to trade. Robinhood. Motherfuckers. Douche. Yeah. But I like it. I like it a lot. Did we get out of the... let's see. This week is green. The candle's green. Okay. Let me see. Did somebody send me a message or something? No, Melissa's just liking my stuff. Melissa, I hope you're in here. Let's see. The podcast. Boom, boom. Let's go to youtube.com. We'll go to your channel. Boom. Let's say about. I don't even know what. You'd think it would tell me at Daily Stock Pick. Let's see. Let's see if this works. There we go. Boom. We'll post that and we'll wait for some folks to come in from the Facebook group. But Brian, I like this. I mean, if you're going to ask ChatGPT, I think these guys have it right. They have done some pretty good cues on it, but Bard is my mainstay. I mean, listen, Apple, Amazon, Microsoft are my top 3 holdings. I do not hold Tesla and Visa, but maybe after Bard tells me so, maybe I'll do it. Okay, let me start the podcast. Boom. Gonna go down here. Oh, you know what? Let's just go over. We'll start it here with SPY. Boom, boom. Good morning. It's Tuesday, May 16th. And yes, it's morning again. So we're starting out talking. I got a lot to talk about today. Quite a few things, including ChatGPT, Berkshire Hathaway, some earnings from Home Depot, SE reported some earnings. I think somebody asked me about that, some questions, and a huge insider buy from somebody we've heard from before, along with the CNBC Top 50 Disruptor list from a question on our Facebook group. So if you're not part of the Facebook group, go to the link tree down below. If you are listening on Spotify or Apple Podcasts and would like to see the charts, join the YouTube. All of those things can be found in the link tree in the link down below. So follow along. Here is SPY. And where do we stand as of today? From a 4-hour standpoint, you're still in. It had a buy at 411. You're trading at 413. If we go back and we look at the weekly, you've got a little baby green candle on top of that 9-day. It's giving us even less indication of what's to come. But when you want to talk about macro, one of the big boys is Home Depot. They just reported. And from the title of the YouTube video that I just did, Home Depot earnings, last year's growth is this year's decline. That's the theme. And you're seeing this when they reported, so their earnings per share beat, but their revenue declined by a good amount. They gave horrible guidance saying that the revenue year over year for the rest of the year will decline. It doesn't mean that it's bad. It means that last year was so good that this year's decline will probably bring the stock price down. Remember, stock prices are based on 2 things: who's buying and who's selling. When people hear bad news, doesn't matter that 2023 is better than 2021. It's not better than 2022. Buyers are very, fickle, I guess is what you'd say. But they gave really bad guidance. This alone brought the Dow down, the expected open, down by 100. Right now, you're down by about 80, so it started to come back. It's down 2.4%. This dipped down to the 2.7 handle, 270 range. I would personally say if you can get this particular stock at 270, I think you're doing pretty well. $270 brings you back towards October of last year, which is the October lows. When you hear about 3,400 on the S&P, when you hear about 3,500 on the S&P, that's where we were in the October lows. You've come all the way back. This reached 347 at its high right there. If we go to FinViz and we go to HD and we look at the 52-week range, 347.25 was the high. You're 16% below your 52-week high. You're only 9% above your 52-week low. Your PE is 17, so it's okay. You're getting a 2.9% dividend. It is down 8% this year. That's how bad this year looks to last year. Last year, this thing was on the rise. If we go back to TrendSpider and we will look at a weekly, last year, you were looking at the decline here is where you started to see this. I'm sorry, I should be talking about 2021. 2021, when we started to come out of the pandemic, this thing just exploded. People wanted to make improvements to their house. Interest rates were super, super low. And then you started to see it decline. It's continued to decline. On the weekly, you're at the 200-day. Where were you on the 200-day last? Well, 2018 crisis, when they first tried to raise interest rates. Pandemic. You haven't been this down this low on this stock for a very long time. So I do think that is a buying opportunity. From a short-term or two-day perspective, I would think 270 is a good price to get this at. It brings you back to October. Will you see it lower? It just depends. If you go to your Home Depot, like I go to a Home Depot, and it's packed, I mean, I couldn't get a parking space in Atlanta the last time I went. So I don't necessarily believe that this is a store problem or that the store has fallen out of favor. I just think people did things to their houses in 2021. 2022 came about, and we're starting to see it just level off a little bit. I don't think we're seeing a systemic problem, but higher interest rates, the broken economy, the bank crisis, could you see credit crisis with the consumer? That could add into this. But just know Home Depot missed. And again, I think it's just year over year problem with the store. If we take a look at Lowe's in comparison, which is, I think they report later this week. They report May 22nd. So next week. This one has been in decline too. It's down 2%. It's under $200. This one, I've said it before. I think under $200 you buy it. Over $200 you sell it. Will it get over 200? Absolutely. At some point in time. This is significantly more focused on the consumer. Home Depot is focused on the contractor for the consumer, and Lowe's is more focused on the consumer. But Home Depot, they typically report first. Lowe's kind of falls in line. You're not seeing this one under its 200-day. It's still, the actual, remember, Home Depot, if we go to FinViz, the PE is 17. Lowe's is a little cheaper. Well, it's actually more expensive. It kind of flipped around. 20%, 20 is where they're at. And they're up 1%. They're kind of hanging on to their gains with, again, Home Depot kind of down. So, again, if you can get Home Depot for a long-term play, I don't think it's a short-term play whatsoever because I think we continue to see some weakness. Some big boys came out with some disclosures. Berkshire, their 13F came out. They added to their Citi and bank account, or I'm sorry, it first came out that Citi and Bank of America were additional shares. They did not buy additional shares. There's just inheriting shares through a subsidiary that they bought. The big bet that they took, and this stock is way up, is Capital One. This one crossed up, I think, about a week or so ago on the 4-hour algorithm. Actually, it was May 12th. So last week, I believe I went over it and I said, hey, the credit crisis, I didn't like this one. Well, Warren Buffett's betting on it now. It is up 6% at 94. Let's see. This one, it got you in at 87. So 94, 87 to 94, almost a 10% gain. It's up 6% today alone. This one's getting the button hook. You're below the 200-day. I think with Buffett in this one, you probably got 112 back to its highs, but realize he is in it for the long term. Big one. Debt ceiling. We still have this debt ceiling kind of hanging over our heads. Not to pardon the pun, but the debt ceiling is there. If you listen to Republicans, we haven't made any progress. There's a Washington Post article that says that Republicans refuse to accept closing some tax loopholes, which is interesting because they want to cut spending, but they don't want to close tax loopholes. One of the government needs more money. You either get it on the revenue side or you get it on the cost side, cutting costs. If you think we're spending too much, then maybe close some tax loopholes, cut the spending, and increase, by closing some tax loopholes. Oh, sorry, special interests. That's right. All your Congress people are in the back pocket of special interests. So understand the only reason they don't want to close those tax loopholes is not because it's bad for the government. It's bad for the economy. None of that. Absolutely 0% of that. It's because they have special interests. There was some discussion about, I posted this particular Twitter thread. It's from a group, a Twitter feed called ChatGPT Trader, and it's the ChatGPT Fund. These guys basically went through, CNN did an analysis, and ChatGPT, it was found, can pick stocks better than top fund managers. That's a big kind of, hey, clickbait headline. It doesn't do, again, we don't know because ChatGPT has just come out. But from a short-term perspective, maybe it can. So this particular ChatGPT trader gave it $50,000, and the fund officially went live, and it's outperforming SPY. Yesterday alone, just yesterday, they made 0.7%. It was a $326 gain. I particularly want to point out that this is a degenerate. They're trading in Robinhood. You can see on the screen right now, ChatGPT Fund is trading in Robinhood. Danger, danger, danger. Now, I do say I've read through this thread. I've read their stocks. It's a social score is what they've done is they asked ChatGPT, hey, give these stocks a score. And they gave it a score. And you see it's 0 to 100, and they list the top ones here. It's a good list. I'd pick and choose from this list. Berkshire, fantastic. Google, they put GLOGL. Not sure why. I probably will ask them. D.R. Horton, DHI, Amazon, Equinox, AVGO, which is Broadcom, First Solar, which had a huge day. Apple is down here. So it's a good list. I like this one. I was on YouTube Live a little bit about maybe 20, 30 minutes ago. And I said, and I talked about it yesterday, I think Bard is better. So I went to Bard and I said, can you help me put together a stock portfolio that will outperform the S&P? It says sure. But it doesn't necessarily give me a portfolio. It asks me to build a portfolio. It says make sure you diversify your holdings, invest in companies with strong fundamentals, invest for long term. Those are three keys to this entire podcast. I told you, you can bet on short-term stuff, but it is a bet. Real big money comes from long-term. Now, what's interesting is it gave me 5 stocks. It gave me Apple, Amazon, Microsoft, Tesla, and Visa. Apple, Amazon, and Microsoft make up a large portion of my personal portfolio. You guys know Apple is close to, it's between 30 and 40% of my portfolio. It just depends on how it moves, but it's a large portion of my portfolio. Amazon, I have a big stake in it. Now, here's what you have to know about Amazon. While Apple has continued to thrive, when we go to Amazon, you're in at 106 on the algorithm. It's at 111, so you're doing well. But look at the weekly. I mean, this is a $170, $180 stock back in 2021. It has come down almost in half. So I haven't sold. I've been adding to it, but I like that particular one. Microsoft, I've added to it. It's done really, really well. Tesla, you guys know, I said at 160, I'm close to the lower 160s. I'm going to start my position. I sold this. I made a mistake. Every time I sell Tesla, it's a mistake. I sold back here at about 120, 130. I tax loss harvested. I took some gains, but I should have waited. I mean, it almost doubled right after I sold it. I didn't get back in. I should have gotten back in, but I do see 166 is where it's trading right now. I want to get it under 165, but I don't hold that one. Visa, I don't hold either. Visa is one that I've been waiting for it to get under 200. It's at 232. In my mind, it's just a little too expensive, but it's been on this run. I mean, take a look at this weekly chart if we want. Weekly chart of Visa. It got down here in October with the October lows. It was here at 180. What a great company to buy at 180. Again, Bart is right. I like Bart a little bit more, but I would absolutely, if you guys are interested in trading, interested in beating the S&P, follow ChatGPT Fund. It's ChatGPT Trader is the Twitter handle. I think they read the thread. I posted the thread in the private Facebook group. It's a great thread. Their fundamentals are really good. I think they're going to do well. I think ChatGPT can do that for them well. I don't know how often they're going to rebalance it, blah, blah, blah. But I like what they're doing. I'm going to try and do something with Bard. That's kind of where I'm at. Speaking of Microsoft, Activision Blizzard, the deal was approved by the EU. It's interesting because, remember, it was the UK that denied the deal. And that was right around this time where it gapped down. Now you're looking at a gap between 80 and 85, and you're trading at 77. With the EU basically saying the deal can go through, I'm not sure how it goes. The question was posed to Satya Nadella, who is their CEO. If you have to do business in the EU, but you can't do business in the UK, is that something that you'd still go through with the deal? And he said, he sidestepped it. He's not going to answer. They're going to go through with the appeal. Appeals are successful sometimes, but a very small percentage of the time. We're talking single-digit percentage points of time. So it's not likely that the Brits will basically reverse this decision. There is some political talk that maybe the U.S. got Britain to actually deny this so that they didn't necessarily have to do it. And then the EU didn't kind of play ball with the Americans because the current administration is not big on allowing a deal like Microsoft and Activision going through. Warren Buffett's 13F didn't say he sold his position. So I think he's still in it. I think he's holding on to it. It's not, if it goes to, back to 50, he's not going to the poorhouse. But I like the decision of the EU because I do think that this one goes through. Am I buying into it? And I just had this discussion with Joe on YouTube Live. It's a gamble. At 52 years old, am I willing to take this gamble? Probably. But I don't think I'm going to do it now, and I may wait too late. This gap right here is just so enticing, and I don't see a huge gap below it. I see that gap being kind of the catalyst for it to go back to 85. But you got to play, understand that the big thing is I just don't see the U.S. allowing it. So I don't know that I'm necessarily going to go in, but I figured I'd bring it up. The U.S. announced today they are buying 3 million barrels of oil to refill the strategic oil reserve. This will push up oil in the short term, I believe. 3 million barrels is not a game changer, but it does increase demand. They need hundreds of millions of barrels to actually increase the strategic oil reserve. So 3 million barrels is just a drop, pardon the pun, drop in the bucket. But it has pushed it up by 0.11. Natural gas is up 2.1%, so oil is going to be up. But that's interesting because we did have quite a few energy names cross up as well. One that I noticed, I think somebody asked me about this. I was watching the ticker scroll yesterday and this morning, and SE, C Limited, which is a software company. Let's go over it just so I'm sure of what they do. Consumer cyclical internet retail. Together with this, engages in digital entertainment, e-commerce, and digital financial services in Southeast Asia, Latin America, rest of Asia. This was a big retail. They are losing $1.6 billion per. It's a total hype, but year to date, it's up 70%. The target price is 101. It's currently trading at, closed at 88. I saw this one up in the 90s in pre-market. I was saying, God, this one has run up. I remember here at 70 saying, hey, it's not making money. Probably on the downslide. You got earnings coming up. I just don't like it. I like it coming down to this 67 kind of name. And I believe I went over this one. The earnings came in. They were disappointing. Look, 72 cents versus 35 cents. It is down to 6.82%. It's trading at 82. So if you got in at 75, I hope you got out at 88 before the earnings. This is an example of playing earnings can be dangerous, even though the stock is running up into earnings. Let me take a sip of water. Okay, more mouth noises for William and the group on YouTube. But C Limited, I just saw it and I saw the earnings. I didn't read up on it. You can read up all about it. I think it's an interesting one because the target price at 101, April, benchmark company, buy 105. They initiated coverage. Back in April, UBS buy to neutral with a $92. Again, it's an $82 stock. If you get a 7 handle on this one, meaning like 79 or something like that, I think you could take that trade. I like it. So SE just came up. Sam from Facebook would like your input on DTC, solo brands. From what I can tell, the screener I'm using on FinViz, it looks okay. I would rather see it below $5, but curious on my thoughts. Let's look at DTC. Here's the 4-hour algorithm. DTC. Solo brands are those red solo cups. It's been beaten down. Wow. This is a beaten down stock. Trading at $5.09, so you may get it below $5. I don't know why this pushed all the way up to $8 there after earnings of 33 cents a share. I don't like the chart. Look at the daily. I mean, it looks like it IPO'd at about 11. It IPO'd up here at 22, and it's just been. I mean, let's look at this. Solo brands, internet retail, operates direct-to-consumer platform, outdoor and lifestyle branded products. The company provides camp stoves under the Solo Stove. Fire puts under the Solo Stove brand, kayaks under the O-Root brand, paddle boards under the Isle brand. So it's an outdoor kind of adventure company that sells brands like that. They're losing $2 million per year. Earnings per this year are expected to go down 168%. Year to date, it's up 39%. The average target price is $10.20. Its short interest is minimal, 2%. 52-week range between 339 and 896. You're right in the middle there. The most recent looks like November buy at a $7 price point. I mean, it's hard to say that it's a good one. I'm looking at March 15th, 100,000. These guys are buying in the $4 to $6 range. That's where I would say your target is. So while trading at $5, $5.09, I think you wait to get to 450. Just looking at this daily chart, see that gap right there between 405 and 427? I think that gap gets filled before this gap from 518 to 7 gets filled. That's just on FinViz. Now, if we go to the algorithm and we trade on the 4-hour, I'll tell you right now, you're out. You made a nice, if you got in March at $4, you made a nice 66% profit there with the algorithm. But the algorithm doesn't have you in. Again, look at that gap. See this gap snake right here? You can more clearly see it on TrendSpider. This is why I tell you TrendSpider is better than FinViz, but you have to have enough trading, dollar amount, capital in your portfolio to justify the cost of TrendSpider. You can use FinViz. FinViz would be all that you would really need. But this is a better, find a charting program. TradingView is a free one that provides some free services. But I like TrendSpider. And this gap snake right here is fantastic between $4 and $4.37. I like it, to see that gap. Because I do think when you come under this 200-day, you go and find that gap. So, Sam, I would say hold off. Be patient. Speaking of FinViz, I was on FinViz, and I went down here to see, let me look at the top insider trades. And that name right there, Robert Dugan, it struck me. And I know Sherry's listening on YouTube right now. So I clicked on Robert Dugan because his name reminded me of something. SMMT. We saw this guy buy $400 million of SMMT. I'm sorry, $500 million. But you just keep adding it up. 14 million, 11 million, 94 million, 376 million. Well, he bought a new one, and it's only $10 million worth, but he owns a good portion of this because you can see him adding certain amounts back here of Pulse. And he bought about $30 million worth of this. He's a 10% owner. He's a director on the board now. PLSE is the symbol. They are losing $58 million. They are not making money. They have no target price. They are not covered. This is a biopharma, medical instruments and supplies. They are up this year. Year to date, 189%. Performance for the year, 441%. Crazy, crazy good. Now, here's what you have to know. This is just a great chart when you look at it from October. Then you go long term, and we look at the weekly. It's beaten down. This was a $40 stock back here. Opened at 45. Its high was 45.82. It's just been beaten down. It is still under the 200-day at $8 a share. He bought at, let's see, $6.51 a share. It is now trading at $8 a share. Do I think you should buy it? I think you should do your research, but I will tell you, if we go back to SMMT and we go over here, and we go down to the insiders, and we look, when did he make that $400 million buy? Well, it was March 6th. It was identified on March 8th. So you'd have to look at the March 8th price. Let's go back and look at the March 8th price. Well, it's interesting. March 9th, we got a buy-in at 150. That's when I brought this up because we saw it. We saw it on FinViz. And I believe Sherry got into this one. Well, how's Sherry doing? Interesting enough, that initial 150, the algorithm got you out with an 8% gain. You could have gotten your 10% and gotten out. Then it gets down here to 148 on May 2nd. And it climbs up really, really well. The algorithm still has you in. Mind you, it still has you in. I think this gap between 330 and 360, and I said this before, if this performs well, you'll see that gap gets filled. But here's what you have to know. Look at the weekly. It is a beaten down stock. That right there is $8. $8.38. And that is in August of 2021. So it was a hyped up stock. It got hyped up when he bought 400 million of it, and it's come down. You may make higher lows. And that's not a bad thing. That's a good thing. But I'd probably wait to get this one for confirmation. Trade it on the 65-day. But I find it interesting that he buys these companies and then it continues to go up. I like it. And I noticed it. Let's talk about something that came up in the private Facebook group, the CNBC Top 50 Disruptors list. I give this a look every time they come out with one. I like to look at it. I'm just never sure, do I want all 50? Like Spotify. We talked about Spotify. I like Spotify. I love Spotify. Spotify pays me to do the podcast. Do I believe in it? They're paying Joe Rogan too much money. They're just paying too much for content. But it's the same thing about Netflix. It was said that Netflix was doing the same thing. I like Spotify. Skills, they're never going to make money. Those guys are just a joke. Real, I like. I use, what's it called? That instant real, whatever it is. Bloom Energy, I like. One that really caught my eye was down here. Shopify, I like. Peloton. I can't find Peloton. It's on this list. Peloton is on this list. There's Palantir is a good one. Blue Apron, which just has a cost problem because it's a race to the bottom in that food delivery. There's Peloton. So Peloton's one, and I want to bring this up because I do know about Peloton. I was a Peloton user. I refused to buy the bike. Your boy, I got money. I ain't buying a $2,000 bike. I went out and I bought a $200 bike off of Amazon, and I put some sensors on it, and I got the app for $12. Well, Peloton spends a hell of a lot more money than $12, servicing their brand, paying their influencers, paying their instructors. They have said, they've moved their strategy around a lot. First, they said, well, our instructors are the differentiator. Then they said, well, our technology is the differentiator. Then they said, well, we're going to rent the bikes to people, and we're going to have a subscription service on the actual hardware and the software. It just never really made sense, and they're losing money, and it's just in a decline. It was ironic because it came up as a buy today, and I said, should I put this in? I put it in. $7.42. I don't think it's a bad buy there, but the only thing that you're hanging your hat on is not that they will turn around and make money. Let's go and look at the fundamentals. They're losing $2 billion this year. They have cash on hand. It doesn't even say. They don't release how much cash on hand they have. They probably have plenty of cash. They will have to cut costs again. How do they cut costs? They give away the freaking bikes. It's not a good business plan. So, where do you go from there? You hope that they're bought. Who's going to buy them? Well, Amazon may buy them, because you know what? If I'm an Amazon Prime member and I can get Peloton yoga, I can get Peloton workouts as part of my Amazon Prime, that is huge. I love, you guys know, Netflix yoga, Netflix workouts. I love it. But disruptors list, I'd probably pick and choose. Do your own research. This is not just, hey, they showed up on this list, they've got to be good. Look at AI. We've talked about AI before. AI, which is C3 AI, they're part of a Hindenburg research It's part of a Hindenburg research claim where, they said it's based on, they were a company that had a different strategy, then switched to AI. Well, the CEO goes on CNBC and talks about how they have a Google prompt for their AI services. Well, Google prompt is just not a good strategy for AI. AI is a conversation. It is not a Google prompt window. This guy is a boomer talking about calculators when computers came out. So, yeah, understand that. Just the disruptor list I like, but I'm not particularly crazy about it. Okay, scans. Coke had a cross up. I talk about Coke. You want to buy it under 60. 64. It's trading at 63. It's going to go under 60 again. Buy it when it's under 60. I told you to buy it back here under 60. You would have made your 10% up here about 64, 65 if you want to get rid of it. The actual, I drink cola. It's got a 2.8% dividend. Should be part of any good portfolio if you drink soda. Oxy had a cross up. Get it while it's under 60. As we're increasing the strategic oil reserve, as oil comes up, this is going to go back above 60. So at 58.61, it's trading at 58.61 right now. Get it. I think it's a good buy. Your boy owns that one in his portfolio. MPLX crossed up, and you'll see there's a lot of energy names on the list today. 3403. I own this one at a significantly lower price. I think my average price is around $8. I have been enjoying the huge dividend ever since COVID. March 30th, I think I bought this in March. It might be around $10 average price, but it's way down there. And I've enjoyed the dividend ever since. If we pull up MPLX and we look at this, in fact, they just paid out dividends yesterday, 9.14%. And since 2021, I've enjoyed both that growth plus a 9.44% dividend, reinvesting it the whole way through. So while my average purchase price goes up because I have that repurchase plan in there, who cares? 10%. Qualcomm. We had a question on Qualcomm the other day about, is it good? I like Qualcomm. Qualcomm here has a cross up. We're waiting for it. 106.27. It is trading at 105. Do I think it goes under 100? That ex-dividend date is a catalyst. I think you got to wait. It's not super expensive compared to other chip makers. This is a 11 PE. AMD and NVIDIA significantly higher PEs, but they came up. CVX, Halliburton, XLE had a cross up. Fang, Venom, which I call is actually Viper, VNOM. An interesting one that came up is FAS, and I will post this entire list in the Facebook group for you. FAS is a 3 times bull share of the financials. 56.34. Are we done with the financials going down? Schwab had a big upgrade yesterday. Bank of America, Capital One Finance was bought by Berkshire throughout the thing. JP Morgan upgraded yesterday. Are we done with it? Well, if you are, the 3 times bull share of the financials at 56.34, that's a great buy. It's a great buy. It came up. UMDD is another levered ETF that came up. This is the mid cap. And mid caps, if you can see, they've been underperforming. I mean, that's just since March. This is a Ultra Pro, so it's 3 times levered. And it's down at 16.98. If you like mid caps, use that one. Some spider sectors went through. We talked about Peloton, Cat, American Express. Home Depot, ironically, had a cross up right before their earnings. And it was at 289.92. You're trading at 280 pre-market. So I think I brought it up yesterday. Again, last year's growth is this year's decline. Just to go back to that. Fang, Diamondback Energy. This one had a cross up. It is at 128.96. You passed your ex-dividend date. This one has a great dividend. What is it, 7-8%? 7.05. A PE of 5. It's energy, it's oil and gas. It's down 4% year to date, but you're getting a 7% dividend. So if you hold it for a year, maybe it's down 4 or 5%, but you're getting a 7% dividend. Wait for that oil to go up. Intuit, we're past tax time. Adobe, ADP, Regeneron, WBD, which is Warner Brothers. This is an interesting cross-up because their Max launch is coming up. Kind of the catalysts are done on this one. Do we go back to $9? Make no mistake, this is an expensive stock. The only one making money in streaming today, I think Paramount may be making money. This one is not making money. They're losing $8 billion this year. They have plenty of cash on hand, so it's not going bankrupt. They are right in between their 52-week range of $8.82 and $18.78. So far this year, they're up 35%. Their average target price is 2018. You're trading at 12. It is a risk. It is 100% a risk. April Truist initiated coverage with a buy at $19. The most recent price targets are 20. But it's a risk. This is a long-term play. So if you buy at 12, buy a small position. And if it goes down to 10, buy a little bit more. Because again, with a $20 price target, I think it's probably a good bet and it had a cross up here. Now, mind you, the algorithm does outperform, but it still loses you money. The algorithm loses you 53%. Your average win, though, is 14%. So if you think that this one's going to come back over the 200-day, say, for instance, we get a debt ceiling deal and the market gets pumped up, you may go up $1 on this one. You may go up a full 10% in a day just because it's speculative. So play that one. The other one that came in, and I'll again, this is all going to be on the Facebook group, but Ross Stores, which is an interesting one. Anybody ever go shopping in Ross Stores? All the shit's on the floor. I don't know who's buying shit at Ross Stores. It's one of the worst run clearance item stores that I've ever been into. Do I find deals? Yeah. Am I better off going to the outlet malls and paying $2 more for a shirt? Absolutely 100%. In my boat, you are. So there's your podcast. Okay. I am driving back at some point to Atlanta at some point, and I've got a bunch of, thank you, Larry. My hair is absolutely yellow. It will be white after about 6 more times of dyeing it. But it looks a lot better than the actual shit brown that I had yesterday. So thank you. Let's look at WW. Wants me to look at KDP. And if you join me live, I'll do this live for you on YouTube. KDP, this is Kellogg Dr. Pepper. It has been absolutely destroyed. I think they have some operational issues, if I'm not mistaken. The algorithm loses you 34%. Buying and holding loses you 9%. I think this is similar to Coke and Pepsi, where it's probably if you drink Dr. Pepper or you use the Keurig packs, it's probably not a bad play. This is let's look at a weekly. I'm going to look at a weekly. Look at the long term on this one. Actually, let me take this out. Remove all annotations. I had a floor right there, ironically. Right up here at 34, I said, I believe I went over this one. If it broke 34, look out below. I think you look out below. If we go over here to Keurig Dr. Pepper, its PE is 34. That's expensive. So they're making income $1.32 billion. Their earnings this year are expected to go down 33%. Your average target price is 38. You're trading at 32 right now. You're 1% above your 52-week low. So WW, I think if you're looking to buy this one, I don't think it's bad to, if it's a long-term play, and I think it should be, I don't think it's bad to slowly get in. This gap that you see down here between 15 and 18, it ain't going back to that. That's from 2018. I don't believe. Look, I mean, this is your first time you're getting to buy this stock on a weekly basis under the 200-day. In my mind, the PE is 34. Look at Coke, P of 28. Better run business in my mind. Pepsi, P of 40. But they're up 7% year to date for Pepsi. Coke is up 0.52% year to date. Keurig Dr. Pepper is down 9%. You might have an opportunity to play a bounce back on this one. So maybe a good one. I don't drink Keurig and I don't drink Dr. Pepper. I drink Coke and Pepsi. So that's, again, bringing it back to what you use in your personal life. If you want to trade it, I don't think it's a bad trade. Personally, I think there's better place in the market to kind of play your money, if you will. Yeah. So, okay, I will answer more questions on YouTube Live. If you have any questions, let's talk about the sponsors first. Visible, if you're paying more than $30 a month for your phone bill, click on the link below. You will get $20 off your first month. I think they're still running the promotion of $5 off, a welcome bonus, ongoing for your service. So it goes from $30 down to $25 a month. And you get $20 off of that. If you have an eSIM phone, simply get an eSIM, get a new number, test it out for a month. It'll cost you $5. But if you're paying like T-Mobile, $45 a month, there's no reason to not test out Visible for $5. Test it out. Do speed tests. If you're getting better speed on T-Mobile and the $600, $500 a year you're spending more on T-Mobile is worth it, continue on T-Mobile. But my take, get as cheap a phone service as you can, because the reality of the phone service is as long as it works, as long as it gives you access, again, I haven't missed a call. I haven't been not able to get data, and I travel all over the country. So I like it. Personally, it's great. If you like the charts that I post here, if you like my algorithm, if you like taking emotion out of your trades, try TrendSpider. There's a free 7-day trial. Sign up with the link down below. Code DSP25 gets you 25% off. I will give you access to my algorithm, which you can see here. Entry in to Apple at 153. Got you out with a 17% gain here when it got you in at 126. 4-hour algorithm is fantastic. Here on Apple, over 2 years, it gives you a 50% gain. Whereas just buying and holding the asset gives you 40% gain. I give you access to my 65-minute algorithm. That is one where it is simply an 8-day EMA, buy when it's under, sell when it's over. That one provides a fantastic day trading opportunity. I give you access to my scanner and all of my watch lists, which include a core portfolio, energy names that I constantly trade, and triple and double levered ETFs for you to trade as well. So either one of those sponsors, that's how you support me. If you make money, I ask that you treat me like a bartender and just tip me. If your boy helped you, if you're going over to ChatGPT and this fund is making you money and I'm the one that led you there, just tip me. Just hit me up. If you're going into Bard and you're doing that stuff, share it with the community on our Facebook group. Our Facebook group actually is a place for all of you guys to share your ideas, to ask your questions. You are not alone with your questions. Sometimes I have to look up the questions that you guys give me. I'm not an expert. I'm no Jim Cramer. I'm not good at picking out Bear Stearns. By the way, 6 p.m. tonight, Elon Musk interview with David Faber, who is taking over the Jim Cramer show. I am hoping that Elon Musk points out inverse, that the inverse is doing better than Jim Cramer himself. But yeah, remember to tip me. I do this stuff for free. I am working on a couple of things, but like I tell most people, the fact that I'm working on it doesn't mean that it's coming out soon, because overall I'm lazy. So I will notify you in the Facebook group. when I'm traveling. I don't know if I'm taking off tonight, which would mean that tomorrow I won't do a show. I don't know if I'm taking off in the morning on Thursday. Who knows when I'll leave. But I'm driving back from New Jersey to Atlanta. So if you have any questions, hit me up on any of the socials. The link tree down below has all the links to my PayPal, Venmo, Cash App, to the special for TrendSpider, to Visible, the link for Visible. And it has all the social posts too. So if you have any questions, hit me up. Thanks, you guys. I will talk to you later. Okay. There we go. Share. I started to hear echo in my voice. I don't know why. Peloton was a COVID hype stock. I don't think I'm going to buy into that. I'm kind of in that one too, Brian. I don't think it was a COVID hype stock. I think Peloton is a great product. The problem I have with Peloton are their financials. That's it. I don't think their product is bad at all. I think their financials are bad. And when I talk about product, I view them as an exercise company. And I wish they would get out of the exercise hardware portion. I wish they would brand themselves something like Nike. With an exercise kind of quote-unquote overview. And SMMT has been good for you, Sherry. I like it. I don't think you're in TrendSpider yet because you're trading lunch money. And again, if you're trading just small amounts, I don't think, and by the way, hit the thumbs up button while you're here. All 15 of you, please. It helps. We're about 5 minutes from open. Let me push you over here. You know what I'm going to look up? Schwab. What's Schwab trading at? 51. It's up. DPST is up. Up. Sherry, I'm not a gym goer. I hate going to the gym. And I hate going to the gym more since the pandemic because people don't wipe off the machines. That's the main problem I have, is that there's douches out there who just don't wipe off machines. New episode. Yeah. Exactly, Brian. I wish, I think the new CEO's name is Barry. I wish when he had come in at 2021, I wish he came in and said, hold on. I like that one. Okay. We're going to do Rodney Scott Scopes. I wish he had come in and said, we're an exercise company. Equinox is good. Sherry, you're paying a lot for Equinox, I think. Not that it's not worth it, but let's see. We're going to go to the Facebook group. Are today's scans. If you want boom, 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 post. And retirement hours are the best. The absolute best. We are going to bum, 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 bum. Oh, sweet. I need to get in on those corporate rates. I had a $25 a month LA Fitness membership that I liked. I would go to their spin classes. This was pre-pandemic. I'd go to their yoga classes. I had my weekly schedule of classes. I started to not lift weights as much because I enjoyed the classes more. Now, I mean, gym memberships now, after the pandemic, are so expensive. And I am not going to Planet Fitness. Sorry. But that ain't your boy, because I got a little bit of a germophobia issue when it comes to and the Planet Fitness by me is not the nicest. The parking area is pretty horrific, and I don't want my car getting we didn't go over shareholder. Tesla shareholder meeting. Yesterday. Bum, bum, bum. Let's title this. Let's see, 5, 16, 23. Okay. Publish now. We're going to go to YouTube. Upload video. Bum, bum, bum. Upload. Then we're going to go to Canva and do a no, I don't want to try it. Let's see, projects. We're just going to use this one, and we're going to say move that over a little bit. Okay. And share. Download. Download. Bum, bum, bum. Woo! Preview, quit. We're going to close that up, close that up. Close this up. We're going to Visa. Boom, boom, boom. And we're going to upload thumbnail. downloads. And we're going to go over here. And we're going to paste there. I need to create a list of podcasts. Okay. Next. Oh, no, it's not made for kids. Next. Public publish. Amazon's still a good buy, I think. Okay, it's processing. Amazon's up 0.49. Apple's up 0.2. Cleveland Cliffs is down 1%. God, that one just keeps going down. Disney down again. Google's up. I'm sure you bought it in the 116 range. Coke is down. Meta is down. Microsoft is up slightly. PanW is back. It hits to, I'm telling you, it hits PanW, Palo Alto Networks, hits that $200 mark, and it just falls off. Like there's no tomorrow. I mean, it's just poison, that $200 a share mark on Palo Alto. Here, I got to bring you back over. Oh, come on, work. Work already for me. Target is down 2%. I like Target, man. Walmart's down 1%. UNH is up at 488. Yeah, look at Palo Alto, man. It hits that 200 and just drops. It'll hit it again. I've got this one in the long term. Okay, I am out of here. I will be back tomorrow. I got to go buy some carrots for the dogs and do some shopping before I decide if I'm actually leaving this afternoon. Okay. You guys have a good week or a good day. I will talk to you guys later. See ya. Stop streaming.